Subscribe to my channel Report Stock.
Welcome to the Deep Dive. We're here to cut through the noise, pull out the key info, and get you well-informed fast. Today, we're diving into Advanced Micro Devices, AMD, specifically their Q2 2025 earnings report. Our mission. We'll pass the big headlines. We want to see what the detailed segment metrics tell us about how AMD is really doing. Think of these reports as, well, a shortcut to understanding a company's health, its direction.
Exactly. And digging into these specifics is just so critical. I mean, yeah, top line revenue, EPS, they grab the headlines. But it's these segment numbers that really show you the strengths, the weaknesses. It gives you a much better feel for projecting stock performance, understanding what's actually driving the business. You just don't get the full story otherwise.
Right. So with that in mind, let's kick off with the big picture. AMD's overall financials for the quarter ending June 2025. They reported total revenue of $7.69 billion. Now, what's really striking there is the year-over-year comparison. That's up 31.7% from the same time last year. Pretty significant jump. And not just that, the $7.69 billion beat the Zacks consensus estimate. Analysts were expecting around $7.41 billion. So that's a beat of, plus 3.74%?
Yeah, and beating revenue estimates like that, it's more than just a nice to have. It's a really positive signal for investors. It suggests they're not just growing, but maybe, gaining ground on competitors, or perhaps their pricing power is holding up better than folks expected. Often a good sign for future market share, builds that investor confidence.
That makes sense. Okay, let's switch gears to earnings per share, EPS. AMD reported $0.48 for the quarter. Now, at first glance, that looks like a drop from 69 cents a year ago. But, and here's the interesting part, that $0.48 actually beat the consensus EPS estimate. Analysts were looking for $0.47, so it's a small beat, plus 2.13%. So how do we square that? Down year over year, but still beating current expectations. What's the real story there for someone looking at the stock?
Well, that dynamic is really quite telling. It suggests that even though there might be some longer-term factors or market shifts affecting that year-ago comparison, they're managing current expectations very effectively. It implies analysts had maybe already baked in some challenges, and AMD still managed to outperform that adjusted view. So they're either bouncing back from a lower point recently or just executing better right now than expected.
Okay, that clarifies things a bit. So let's move from the overall numbers into the different parts of the business, the segmented net revenues. This is really where you see what's firing on all cylinders and what might be lagging. Get much deeper inside the company. Let's start with data center net revenue, a really key area. They brought in $3.24 billion here. That was actually a slight miss compared to the average analyst estimate, which was $3.31 billion. But it's still showing solid growth year over year, up 14.3%.
Yeah, data center is absolutely critical for AMD, right? High growth, high value, especially with all the AI demand. So a slight miss there, even with double-digit growth, it tells me expectations were probably sky high.
Yeah.
But the underlying demand, the expansion, it's still clearly robust. It's not, a runaway success against estimates, but definitely not bad news. Still expanding.
Okay, so solid, but maybe not quite meeting those really high hopes. Let's look at embedded net revenue next. This segment came in at $824 million, and this one actually beat the estimate slightly. Analysts were expecting $818.3 million. However, looking year over year, this segment saw a decline of 4.3%. So a beat, but down from last year. What's that tell us?
That's interesting. It's quite nuanced. Beating the estimate while still shrinking year over year, it could mean analysts were already bracing for a bigger slowdown in embedded, so the fact AMD did better than that lower bar shows some resilience. But yeah, the overall market for embedded solutions might just be facing some headwinds, or maybe AMD is shifting focus a bit. It makes you ask, is it the market or is it AMD?
Right, a question mark there. But
yeah.
Okay, if you're looking for the real headline grabber within the segments this quarter, it's got to be gaming net revenue. This was a huge standout. They reported $1.12 billion, and get this, the average analyst estimate was only $750.4 million, so just blew past expectations. And the year-over-year growth, an incredible plus 73.2%.
Wow. Yeah, that's fascinating. The sheer size of that beat and that growth rate in gaming, it really signals incredibly strong demand for their gaming products. Maybe new console cycles kicking in strongly, or their GPUs are really hitting the mark, or maybe consumers are just spending big in that area right now. Whatever it is, it's a huge win for them. Shows they're more than just a data center company.
Absolutely, a very bright spot. Okay, one more segment, client net revenue. This one reported $2.5 billion. Like data center, it was a slight miss against the estimate analysts expected $2.53 billion. But similar to gaming, the year-over-year growth was really strong, up 67.5%. So another big growth number despite the small miss. How does this fit in?
Well, when you put client next to gaming, you see this powerful trend on the consumer-facing side. Even with that tiny miss on the estimate, growing almost 68% year over year in client, that's very positive. It suggests demand for their PC chips, for example, is really robust. Could be a sign of the broader PC market recovering, or maybe AMD is just taking share. Either way, it points towards a much healthier, more diversified business for them.
Okay, so we've unpacked the numbers, the segments. What does it all mean for the stock itself? That's what a lot of people listening will be wondering. Well, shares of AMD have definitely been on a tear recently, up plus 31.1% over just the past month. And you compare that to the broader market, the S&P 500 composite was only up, 1% in the same period? So AMD is massively outperformed. But interestingly, despite that huge run, AMD currently has a Zacks rank #3. That's basically a hold rating. It suggests, maybe it performs more in line with the market in the near term.
Yeah, and that raises a really important question, doesn't it, for you listening? Why would a stock have such a massive run-up but still get a hold? What does that tell you about sentiment or expectations? Often it means a lot of the good news might already be, priced into the stock price, or maybe the market's just a bit cautious, waiting to see if this growth, especially in certain segments like data center, can be sustained consistently. It definitely pushes you to look beyond just the last month's performance and think about what's next.
Good point. So just to quickly wrap up our deep dive here, AMD clearly delivered overall beats on revenue and EPS, always good. But the deeper story in this Q2 report seems to be about the impressive growth, really standout growth in gaming and client. It feels like those areas are really stepping up, not just covering for slight misses elsewhere, but showing real strength and maybe a more balanced growth path forward. It just underscores, again, why looking beyond those initial headlines is so important to really understand what's going on with the company.
Absolutely. This kind of dive really shows how the crucial details are often buried deeper in the report. And it leaves you thinking, doesn't it? If these segment numbers tell such a vital story, what other layers of financial data, maybe things we didn't even touch on today, might hold equally surprising insights that could change how we see broader market trends?
Subscribe to my channel Report Stock.